Hello traders, Gary Wagner here. It is just about 11:30 in Honolulu, 4:30 in New York. I apologize for the delay. We have had some technical difficulties here. It is Wednesday, the 22nd day of January 2013, and this is the daily report for gold and silver. We have a moderate sell-off today in the marketplace, with gold trading off about $4, silver trading off about 10 cents on the day. We'll get silver towards the end of the show, but as far as gold goes, currently trading at 1336.65. The low on the day is 1335.50. As I have said, or probably said, because I've tried to re-record this a couple of times today, we are having some pretty strong technical difficulties with our system, so this will be a shortened edition, but we'll try to cover all that we need to cover nonetheless. Looking at a 240-minute chart, we'll go ahead and compress that. On this chart, we have created some Fib retracement areas, and we're going to use these retracement areas really to guide us in terms of our exit strategies. We have one from 1294 down to 1211. We have another one from 1294 to 1227, one from 1294 down to 1180, 1185, and then the last one that we'll look at is roughly 1252 down to that same point. Now, when we do that, we identify a couple of areas, and what we're looking for really more than anything else is what we call Fib Harmonics, what I call Fib Harmonics, which is simply an area in which you have information from two different Fib retracements that give you the same result. So for example, this to me is fairly strong, 1227, because you have a 23% retracement here and you have a 38% retracement here, both pointing to the same area. Now, if we move this over a little bit, let's go ahead and compress it just a little bit more so we can get all of our numbers in here. There we go. We have another area. It's not quite a harmonics. I tend to call it a band because you've got a couple of numbers away. But we've got 1215 to 1211. So that's going to be a band that we look at. 1227, then 1215, 1211, and then 1203. These are going to be the areas that we want to look at. Should the market continue to move in our favor, move down, these are the areas we want to look at to see how it reacts, if in fact it finds support or does not. And traders, we are looking at a daily chart, and this is the chart that we have our current Elliott wave count as well as some Fib retracements, but most importantly, and the reason for bringing this up right now, is this long-standing resistance line. Of course, I have uncompressed the chart so we can take a look at some of the details, and it starts well above this at 1800. But we talked about the fact that these series of tops really showed us this particular high here. This is the one rally of 2013. The only really decent rally, this was the last attempted rally towards the end of the year, starts middle of October, takes us into November. From November on, the market trades lower, and then we form what we have labeled as our double bottom, which is both off of 1186. Now, as the market started to trade back up, it was my belief that we would probably see it hit this particular area and bounce back off. While it's much too early to tell, the one thing that we can say is that it has found some real resistance in this area. You can see the fact that it hit these tops right in here and is now trading off those tops. My sentiment hasn't changed. I believe that that is a signal that it will probably begin to trade lower, but we will have to see how that unfolds. Now traders, all I've done is I've taken the chart that we have been looking at, I've converted it back to a 3-day chart. Sometimes if we look at it in 1, 2, or 3-day, we can really see when we convert it to a 3-day chart just how much we got in terms of a top. This is almost a shooting star type candle. Here you get really a variation off a three-river evening right in here. You get that variation right in here. And what I mean by a variation, simply put, is effectively you get the large green candle, a star, and a red candle. Large green candle, star, and a red candle. Now here we've gotten the larger green candle, a smaller bodied candle, but depending on how this candle forms, because it's a 3-day, and I believe we're in the first or second day of that candle, how this forms, we could once again get that three river evening star variation. Now, if that's the case, where are we going to look for this market to go to? We talked about a couple of really short-term levels. And the short-term levels were based on, of course, our short-term studies. In terms of our longer-term studies, what we'll call interim or major support and resistance, 1219 is the area that we want to look at. That's our 23% retracement, and that is a retracement from this entire move. So that's pretty strong. Let's see how the market reacts if it continues to trade lower, and if it trades into the area we need to break through 27. We have another band that we identified between 11 and 15, and then at 1203. So we have some areas we want to look at in terms of our strategies. Lastly, I want to take a look at this weekly chart. On a weekly chart, and especially this is in Japanese average format, you're not going to see a whole lot. Of course, this is midweek, but you can see it's very much doji-esque. And what I mean by that, it's a very, very small body. We typically get that at transition points. It wouldn't surprise me to see this conclude as a small-bodied or a red-bodied Japanese average candle and then begin to trade lower. Now, lastly, all I want to do is so we can take a look at the standard candlestick, and this gives us true opens and closes. And even in this, it's a down week so far. You see it is in red, trading at 36.20. But it's a very, very small-bodied candle, even at the middle of the week. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update review. Bye-bye.